all the U.S. economic indicators are looking good these days. The economy grew over the first 2 quarters of this year. Housing prices, the stock market, they're both up. And even Moody's has upgraded the U.S. credit outlook to stable from negative. But at least one person is saying, not so fast. Peter Schiff is the head of the investment firm Euro Pacific Capital. He is joining us now from Weston, Connecticut. Good morning to you. Welcome to our program.
Good morning, and thanks for having me on.
So why do you believe that the U.S. is headed for an economic disaster even worse than the one that we saw back in 2008?
Well, first of all, I was also one of the few people to have accurately forecast the last disaster, when the same people who are now saying everything is great are oblivious to an even greater disaster that is looming. But, you talked about the U.S. economy is doing well. That's just according to the government. But even if you look at their numbers, we got the GDP numbers that came out yesterday, and people are making a big deal that the economy grew at 1.7%, which was better than estimates. But if you recall, in the first quarter of 2013, the government first estimated that the GDP grew at 2.5%. But yesterday they revised that down to just 1.1%. I believe by the time they finish revising the second quarter numbers down, it'll be close to zero. In fact, in order to get a 1.7% print, the government had to assume that inflation at an annualized rate in America was just 0.7%. Now, I don't believe that for a minute. In fact, if the inflation rate that they used, or the deflator, was accurate, it would have already revealed that the United States is in a recession right now. In fact, it has been in a recession for the entirety of the Obama presidency.
Okay, so are you suggesting that the American government is misleading the public and giving out inaccurate information?
Well, I'm not suggesting it. I'm saying it. That is what they're doing.
All righty.
That's how the government designs these numbers. They're deliberately designed to paint a rosier picture of the economy. Every time they go and change the methodology, they do it in a way that's more favorable. So when they measure inflation, they get a lower number. When they measure unemployment, they deliberately get a lower number. When they measure GDP, they get a higher number. Right? It's not really information. It's more like propaganda. And individuals and investors need to look through that government smokescreen, open up their eyes, and see what's actually happening.
So
and if you look at the real data, right, the shrink... Excuse me?
When we go back to 2008, the trigger were all those dirty mortgages, the subprime mortgage crisis. What is going to be the trigger this time around that you say will cause the economy to collapse and likely have ramifications here in Canada and around the world? What will be that trigger this time?
Okay, the trigger wasn't the mortgages. That was the consequence. The Fed pulled the trigger with cheap money. It was the artificially low interest rates that were responsible for the housing bubble. That and government guaranteed mortgages. Well, if you look at what they're doing now, the Fed is even more reckless than it was back then. The government is even more involved in propping up the housing market now than it was back then. So together, the government and the Fed have inflated a much bigger bubble than they did last time. Now, maybe you could say subprime was the pin that pricked the bubble. What's going to be the pin that pricks the bubble this time? Maybe it's going to be a big drop in the bond market or a big drop in the dollar, but there's going to be a pin because this bubble is too big to not get pricked. And when it does, the aftermath is going to be far worse than what happened in 2008, 2009.
Okay, just quickly, what year? When is this going to happen, Mr. Schiff?
Well, again, when people were asking me that question in 2004 and 2005, I couldn't give them a definite year. I just knew that it was coming because I understood the fundamentals. And as I tried to mention a bit earlier, if you look at the fundamentals, if you look at the contracting labor force, the declining use of energy, the explosion of poverty in America and an income inequality, all the record numbers of people on food stamps and on disability, all the part-time jobs that are now replacing the full-time jobs that we've lost, all of this is consistent with a shrinking economy, but the government won't admit it. Meanwhile, the cost of living is rising rapidly in America, and we pretend that there's not enough inflation. And Ben Bernanke is out there trying to lay the foundation now for more QE because he knows that he can never taper. He's just bluffing. He can't tell the market the truth that the U.S. economy is completely addicted to his monetary heroin. And the minute he takes it away, it's going to be a complete economic withdrawal.
We are out of time. Peter Schiff, thank you so much for that this morning.